All right, what's happening, everybody? Happy Monday. Welcome to Ask an Analyst. This is Chris Pulver here. I will be the host for this afternoon session. It is Monday, the 24th of May. Let's go ahead and get started. So hello out there, everybody. If you can see my screen, I've got a chart in the background, RIOT. We can start with that one. I might have a little trading partner join him here in just a minute. It'd be my dog, not Tyson. He's going to be busy today. He's selling his house and had some crazy cash offers, I don't know, 40 to 50K over asking. So that's a good problem to have, of course. But that also brings into question, what is the current environment? It looks like we are seeing some elements of euphoria out there. And typically that's not a good thing. So with real estate, in as hot of a time as it is, again, it's a good problem. I'm not saying that real estate's going to be a bubble or anything like that, but people are buying high and people are selling high, right? I mean, so it's good to sell high, but when you're buying high, it's like, all right, you're pretty much neutralizing. So it's going to be an interesting time over the next maybe 3 to 6 months. For Tyson, myself, and Equities on Demand, we continue to play a directionally neutral strategy for our course. For Equities on Demand, we have strategies called power plays, and we've incorporated bear call spreads this week. This is the first time we've made those official calls. We talked about them last week. And essentially this, it means that when we want to see price stay below a certain high, we are looking to trade bear call spreads. And that means that we are essentially selling a call at a high, buying a call just above that. And as long as price stays below our sold call level, we make profit on that, or we collect that full premium or full credit. So we have a handful of trades like that this week. We also have bull put spreads. And if you want me to draw this on the chart, I will. This is probably a repeat or some, information that many of our Equities on Demand students know and see this every single week. For any newbies out there that are watching this AAA session or Ask an Analyst session for the first time, this is some pretty important stuff to know. So I'll just draw this out on the screen. So as an example, if we sell a call, we buy a call, we sell a put, we buy a put, right? And this would be stock price. Stock price. And down here, stock price. Right? So if this is where price is at, and we have a bear call spread, and down here we have a bull put spread, what this helps us do is collect some profit, and all we're asking for price to do is stay above. So if we are buying down here, so let's say that we sell a put and buy a put, and price stays above that sold put level. As long as price finishes by expiration above this sold put level, we make money. So that's a good thing, right? So if price stays above the sold put level, we collect full credit. Everybody with me on that? Okay, and up here, if price stays below the sold call level, we collect full credit. And so the reason that we think this is important is because there are stocks that are going to go up. There are stocks that are going to go down. We've seen a lot of indecision the last couple of weeks. In fact, we've had some very interesting plays where, the markets have sold off pretty heavily the last 2-3 weeks. We've had 2 or 3 days in each week where the market has been bearish and causing some concern. We saw a bit of a crypto crash last week on Wednesday. We saw some panic buying. We're settled back into the lows again. I'll talk about cryptos here in a little bit. But we have the markets are clearly showing some signs of indecision. Now, we might see the markets, dip like they have. The SPY dropped 4+%. The Dow Jones dropped 4+%. The NASDAQ, the IWM, or Russell 2000 dropped like 7.5%. But they're fighting back, right? So we see the bull market and the trends are still defended. But it just doesn't take much to start breaking some massive technical levels and raising some red flags. And when you see a lot of elements of euphoria and greed and kind of an excessive amount of risk appetite, it just makes me a little bit more cautious. So, again, I'm not saying that I'm anti-bull market. I'm not bearish by any means. I'm still long some volatility, but I'm not trading inverse ETFs. I think the market can continue to keep, 4% dips and 5% rallies, 4% dips, 5% rallies, 6% dips, 7% rallies. I think the market can still fight and still sustain this trend for maybe the next 1 to 3 months. If we're going to have any type of turbulence or, bearishness, it might be with a wild fall. We might, unless we have a sell-off literally this week or next week to kind of end May on a sour note, we might just survive for the summer. And then coming into August and September, it'll be interesting to see what happens when, unemployment benefits for the U.S. all of a sudden end at the end of September. Are we talking about another stimulus package for the U.S.? Despite having, $4 trillion added to the markets and into, the monetary system over the last 12 to 16 months, again, is a concern. So is inflation a real thing? Yes. But is it so real and so present that it's going to actually happen? That's the question. I mean, really, that's like the $1 trillion question, because if everybody knows about it, there's still big money tends to be contrarian for the most part. Big money tends to be contrarian. And so if every retail trader, if every consumer in the world is talking about inflation, I mean, how likely is it? I don't know. And that's a really important question to know. And that's why we're watching the elements that we're watching. So our bear call spread, as long as price stays below this by expiration, we can make money on both sides. So we do have some plays that we are in. We're selling high. We're buying low. We're looking to collect some credits. It's, basically we have potentially up to like 20 plus trades this week just in equities on demand. And I think, I told traders this week, the expectation is we're going to win some, we're going to lose some. But if we can have a decent win percentage, we're going to walk away profitable. If we can have, some of our wins bigger than our losses, we're going to walk away profitable. And even if that's how we survive over the next 3-4 weeks, if that's how we survive the next 3 months, until we have, a lot more confidence in where the markets are actually going to go, whether the market's going to sustain this bullishness or give it all back and we start to wipe away some of these massive gains we've seen since 2020, we don't know, right? But we're watching carefully, we're watching intently, and we'll continue to play strategies we think will do best in the market, right? All the while, trying to tighten up that bottom line, not take an unnecessary amount of risk. And we keep saying this in equities on demand. We like to risk less to make more. All right. So that's a little strategy, overview with our bull put spreads and our bear call spreads. And we've got a couple of these going this week. And hopefully we make some profits. So if you come back and join us next week, we'll recap. Right. Also, let's get into some cryptocurrencies really quickly. Really interesting weekend on cryptocurrencies. I had probably 20 plus chart alarms that were activated. And they were all in cryptos. And so this is the low from last Wednesday. Now, a couple things happened here from last Wednesday. Crypto market went pretty crazy. I think that it did scare some traders out of positions. I think it forced some panic selling. I think it forced some panic buying. I don't necessarily think that we're at the lows yet. Now, again, that's my opinion. I could be missing out on the next big leg of Bitcoin or the next big leg of Ethereum and Litecoin. But my thoughts are we still have an incredible amount of support back down here around $20,000, right? We have mining costs on Bitcoin around $20,000 to $25,000. So I think that if we see this high to low, lower high to lower low, we might come back in here, see some lower highs forming, flooding our way back down into the same lows from last Wednesday, flooding into maybe some lower lows. This is the area I'm looking to buy. This is around 29,000. Let's just call it 30,000. That's about the alert from last week. 30,000 to 20,000. That's my level that I'm looking to buy some Bitcoin. All right. I also think that Ethereum and Litecoin can also outperform. I still think they can outperform. So I'm not saying I'm anti-Bitcoin at all. I think Bitcoin's a great buy and hold. I think Bitcoin at 20,000 is an amazing buy and hold. I think, Tyson and I talked about this last week also. GBTC. It's essentially an ETF that trades a lot like Bitcoin. So if you can buy GBTC at $25 or $20 or $21 or $24, all those levels are fantastic. And that would essentially be like owning Bitcoin around that 20K or 24K level. All right. So I like Bitcoin. If we get 30K or lower, ideally, I'd try to buy this as close to 20,000 as possible. That's my plan. Ethereum. I did test the waters on some Ethereum. We're trading at 24.53 right now. We had a low over the weekend. I did take a small position right here around 18.50. Now, I am still prepared for this to be high, low, lower high, lower low. Now, even if it ends up consolidating, even if it takes a little bit longer, builds a base, we see some type of falling wedge. look, don't be surprised in some of these larger time frames with these cryptocurrencies to see exactly this. We have this amazing rally. The market establishes a base and it takes a lot of time. We have this amazing rally. We just started a bit of a sell-off. Now, this took, I don't know, 2 years, right? This is 2018, 2019, 2020. This took 2.5 to 3 years to actually start to have that next massive move higher, right? So I know that there's, cryptos in general from 2018 to 2021 are very different. They're way more mainstream. They're way more relevant, but the volatility hasn't changed. So if we see this type of volatility and this type of correction, I still think we can try to push lower on Ethereum, and I hope that we do. I know that I took a little level here at 1850, but I think that if we settle back in to some slightly lower lows, this is what I'm looking for, something like this. If we have high to low, lower high to lower low, and we just kind of consolidate, we kind of build this falling wedge type base. We come back into the start of where this whole breakout and trend occurred back around $1,000. And again, maybe I'm waiting too long. Maybe I'm waiting too low. Maybe we never see these prices again. Maybe. But what if we do? So from 1850 down to essentially $1,000, this is my area that I'm looking to kind of level into Ethereum. And I've told traders this in my personal trader in the Flex Room. I like this level. I like the halfway point, and I like this starting point. So a little bit of money here, a little bit of money here, a little bit of money here, build up my position, and then long-term, my target's here. If we take out those highs or have another rally, maybe it takes 6 months. Maybe it takes a year. But I'm willing to say, you know what? If I'm already in, by the way, I'm still holding Ethereum at like $400. So getting back in at, $1,200, $1,500, it's going to change my break even by a lot. So I have to be comfortable with that risk. I'm essentially going from a dirt cheap 2019 low into, hoping we get a good deal on some current discounts. But I don't know if it's going to be as easy as this is a sell-off, everybody buys it, and then off we go. And if it is, congratulations to everyone that bought the panic sell-off last week. If it's not, and I'm, say I'm right. Let's say this takes a little bit longer to build that base. Let's say we go into more of a corrective ways. Let's say that all the profits that were generated, you know how many thousands of % growth was available on cryptos in the last 12 to 16 months? It's insane. So again, I'm thinking big money, maybe just waiting and biding their time. And maybe this is a flush out of all the speculators, right? Everyone that's in and guessing and having really no idea what they're doing in trading, they're just buying, right? They're HODLing, and they think that cryptos are just going to go up forever. I don't know. I think they're gonna feel some pain. They're gonna hit some levels, psychologically that they're not gonna like. Let's say, for example, that last week. Let's just use last week Wednesday. If you bought last week Wednesday and Ethereum went up, and then you saw it dip over the weekend, and it goes down again, and it goes down again, at some point, people that got in with really no rhyme or reason other than, well, it's 50% down, I'm going to go ahead and buy it. Well, that's great. But if it goes against you, let's say it goes against you another 50%, even from a great level. Not everyone is comfortable psychologically sitting on a 50% drawdown, especially if it's with money you cannot afford to lose, right? So again, this is the difference between a trader and a non-trader. We do this for a living. We do this full time. This is why I'm not in a hurry to get back into cryptos. I've protected a lot of profit from 2019 levels all the way to these recent highs. I was protecting my Ethereum up here around $4,000+. Again, I'm happy. And I talked about that openly in my Flex Room. I did some YouTube videos about it. I mean, I thought that this has to be something I can protect. And it is. And now I'm waiting for a better level. And I hope I get it, right? So it's not just Bitcoin. It's not just Ethereum. It's also, I like Litecoin as well. Okay, Litecoin had a massive sell-off. Again, can we have a sell-off here, pull back, maybe some past support becomes resistance, maybe we work our way back down, maybe we start to settle back into these levels, I would love to get Litecoin as close to $100 as possible. In fact, I put in a limit to buy Litecoin at $105. Okay, I bought some over the weekend when this chart alarm went off right here. Okay, that low from last Wednesday, this low from last Wednesday was 144.10. When that chart alarm went off, I went ahead and took a little position right there. I bought some Litecoin, and now I'm looking for this level down. That's $70. Here's past resistance around $95. Like I said, I like $100. Okay, so from here, little stab on the weekend to $100, this is my accumulation zone for Litecoin, and I'll continue to hold that. Make sense? All right. So that's a little cryptocurrency. Let's talk about some FX. Let's talk about some Forex here. Let's go to the dollar index. Okay, dollar index. We're trading at 11689. Technically speaking, I think the dollar index still has to break this trend line, and it's not there yet. I am very patiently waiting for this trend line to break because I like this look for several currency pairs. Okay, you take this dollar index, and again, this is my opinion. So dollar index, looking for trend line to break. Okay, I'm looking for double bottom or oversold conditions and divergence. All right. So, why am I bullish on the dollar? Again, I think this is a bit of a contrarian trade. I think everything you read about right now with the dollar pertains to the dollar. A lot of headlines are bearish the dollar, right? This doesn't mean that, to me, this doesn't mean that big money is bearish the dollar. This means that big money is creating the narrative to get other people to be bearish the dollar. Because I think technically and contrarian wise, it's to me, a better trade to be long the dollar for right now. And the reason why is, where else can you put your money? I'm just throwing it out there. If you are worried about the volatility in cryptos, if you're uncertain about the continuation of these bull markets, and you don't want to put your money into fresh stocks, you don't want to buy growth stocks at current highs, whatever. If you're a little cautious on stocks, if you're a little scared on cryptos, and you're not going to keep your money in a bank, and bonds and treasuries are at super lows, where do you put your money? And this is why I think that even though it's been talked about as a bearish dollar and the dollar is just going to continue to get weaker, we're in the same scenario with a lot of other central banks. At some point, the Fed is going to have to talk about raising rates. And again, whether they do it or not doesn't matter. They're talking about not touching rates until 2023 and trying to keep this market calm. And maybe that's the case. Maybe the market continues to stay this way and weird and cautious and overheated until, everyone that has all this pent-up capital, all this pent-up savings and cash essentially is done spending. And so if 2021 is everyone's got to go on vacation, everyone's got to do something because socially we can come out of our houses, we can, not be socially distanced anymore worldwide, right? If this is like the great revenge spree, the revenge buying spree, then so be it. Stocks will do fine. Risk appetite will remain. Real estate, commodities, everything will continue to run hot. But at some point, inflation's a very real factor. And I know that everyone's talking about inflation too. So, if inflation gets very real where the Fed has to confront it, then the dollar's going to get some bids. I'm watching the 10-year notes really closely. I think that the 10-year note starts to slip above 2% probably this year. If so, inflation is going to be a very real thing. That's also enough to cause some really scary moments in the stock market because you're going to start to see people leaving stocks and going into something safer like treasuries, like bonds, like the dollar, right? Again, my opinion. I could be totally wrong, but I've done this for a long enough time. I don't think I'm totally wrong here. I think that the contrarian play is to be long the dollar, but I know that it's not ready. I mean, we might see the dollar still push a little bit lower and then start to build a base at this level or slightly lower, and then we start looking for the trend line break, and then the dollar has room to rally. So one might be, here's the left side of the trend line. I need to stay patient. Here's the right side of the trend line. I can get a little bit more aggressive. Now, the trades that I like, and I've talked about this in my trading room, I still like dollar CAD long. Okay, I still like Aussie dollar short. I like the New Zealand dollar short. And I like the dollar Swiss long. Those are the four right now that I'm going to play and play the most aggressive. I know that I could also be short pound dollar. I could be short euro dollar. I could be, long or short dollar yen, but I don't love those. I think technically these are my favorites. These are what I'm going to focus in on. And that's it. That's my dollar index outlook. Those are the four that I'm trading. We talk about some yen pairs. Okay, let's take a look at the Aussie yen. Aussie yen is on the right-hand side of the trend line. I think that the Aussie yen is the canary in the coal mine. And I know that traders have been very patient with me on the yen pairs, right? We are short Aussie yen. We are short Swiss yen, CAD yen, pound yen. New Zealand yen was activated last week. We've got some robot levels running on Price Action Pro. look, I'm not short these massive positions. I mean, it's like a little test, a little sample. But I do think that this is going to find a way to correct back down into this same low. We might come back a little bit lower into past resistance becoming support. We might have a 1, 2, 3 wave move to the downside. Maybe it's here. Maybe it's here. But once this Aussie yen is done with some type of correction, I think we still have a room to go higher. But if we keep doing this, look at this low to higher low to higher low to higher low. If we end up breaking the structure right here, right? Let me use some straighter lines. If we end up breaking this structure right here, does it make sense that we could break this structure to the downside and sell off a little bit more, right? And this is all I'm looking for. I'm currently short on the Aussie yen up in these highs. So if we come back down to any reasonable past resistance, I'm making money on that Aussie yen. So I don't need a lot in my favor, but I need something. And I think that even right now, the Aussie yen looks good to the downside. If it does keep drifting higher and higher and higher, what I am doing is I'm looking at selling equal highs and equal highs and equal highs. Small trades. I can't emphasize it enough. I am in very small trades here on these yen pairs because the last thing I want to do is be over leveraged on a yen pair. And, maybe we don't have a capitulation move. Maybe this thing is sideways, 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 and then we run up first, and then we end up coming back down. And so even if we have this type of movement, I want to be prepared for that. And how does that happen? Extend this trend line right here, right? Extend this trend line right here. Let me take this down one little bit right here. So if I extend this trend line, we may dance around the right side of the trend line. We may dance around over here a little bit, come back and test the back side of it. But anytime the structure breaks, I'm looking for a movement back down to equal lows or past resistance to become support. Aussie yen, CAD yen, Swiss yen, they're all pretty similar. They're all taking their sweet time. Yet CAD yen, one of my favorite technical setups right now is CAD yen. Okay, and this is trading at 90.21. I hope this thing wants to at least fall back down to 86.50 or hopefully 85.50. Past resistance way back here around 84.50 actually. So I'm looking for something like this. High to low, lower high to lower low on CAD yen. That's it. If we see price come back down to this level, I'm going to take some profit because I'm currently short in here for 3 small trades. One thing on the CAD is you have to watch oil. One thing on dollar CAD, you got to watch the dollar index. You got to watch oil. We're currently trading at 65.92. Okay. Could oil come up back to this high around $66, $67 and then end up failing? Sure. We could see oil come back down to the low 50s. I've talked about it for months, right? That's what I'm looking for. So I'm still near-term bearish on oil. I think that this eventually with a movement back down into the mid to low 50s is what helps our dollar CAD start to get some bids to the upside, starts to break some massive trend lines. The Swiss yen is another one that I'm watching closely. This one's at 121. I'm actually looking for a fairly big move on Swiss yen back to 116. That's target 1. If we end up breaking this trend line on Swiss yen, I'm looking for this push lower to target 2. So first level is let's see if we can go bearish on Swiss yen down to 116. From there, I'm looking for a move into 112 and 111. But this is going to be something I'm just sitting in some small positions right now, waiting for a trend line to break. Okay, I could certainly be more aggressive with the trend line, but if price doesn't do anything and it just goes sideways, this to me, connecting the lows, this is a much better trend line to watch. If we break this trend line, then I start to see us go down to 116. Okay, pound yen. Pound yen also watching closely. We have this amazing structure right in here. I think the pound yen could work its way back down, set up a bit of a complex head and shoulders. But if we break those levels, I think this is an incredible head and shoulders pattern. And again, I said this, just a few minutes ago, the canary in the coal mine. If we're going to have some type of sell-off, a lot of times you can see this forecasted with currencies. And if you have risk-off trading like the Japanese yen looking to get stronger, that would be a risk-off environment. Now, it doesn't mean it's going to be a massive sustained risk-off environment, but we could probably see the JPY get stronger for maybe a month. Maybe it's 1 month of strength in the JPY. Well, that's enough to probably cover 300 pips, 500 pips, 1,000 pips worth of movement, because you have to remember we've also gone thousands of pips to the upside, right? This pound yen from this recent low in March of last year is up 3,000 pips. Just from this last rally on the pound yen, it's up 2,100 pips with virtually no pullback. We have some oscillations, but we have not seen the bears break any lows in over 2,000 pips. So I think it's a good looking setup. I think it's going to, when it happens, it's going to happen. It's going to be violent. It's going to be fast. Expect higher volatility. I just don't know when. And that's what makes this whole environment tricky is, look, I'm pretty committed to the positions I'm in. I'm pretty committed to the directions I'm in, but I have to trade small and continue to manage. And I know that I'm missing out on maybe some short-term opportunities here and there, or maybe I'm just not interested in short-term opportunities because volatility still remains very low. If you don't believe me, take a look at this. We reference this every day in my trading room. Okay, we have the New Zealand dollar strong today. Everything else is not. Let's say we just go ahead, cancel the New Zealand dollar for a second. Our high is 25 on this vertical axis and our low is 30. This is low volatility. I know the New Zealand dollar is strong today. Doesn't mean anything. It's strong today. Okay, fine. We also have news this week with the RBNZ. There's going to be a rate decision, cash rate decision. Doesn't mean that the New Zealand dollar is going to sustain this move. In fact, I'm interested. Let's see what happened with that New Zealand dollar strength. It is currently at 107.38. Now, there's a pretty strong candle on Aussie New Zealand, but do we create some pockets? A little bit. I'd like to see a bit more volatility here. So can we see this level, maybe jumping back up here? I don't know. I'll talk about it tomorrow in Flex. I'm really more interested in a larger time frame play on this. This one it still has to prove a lot to me. Possibly a trend line break in here that's on the verge. We might know more this week. We have a lot of indecision right here in the Aussie New Zealand. With the rate decision coming up, do we actually break the structure and see a stronger New Zealand than the Aussie? That's a possibility for this week, is to see the Aussie New Zealand start to break these recent lows. In fact, if we see a daily close below this level, let me find a price point here. If we can close below around 107.10, if we can close below 107.10 right in here, or we can close above 108. Let's just keep them even, round numbers, 107 and 108. Okay, if we close below 107 with a daily candle, I think we can stay bearish to try to retest these 104, 105 levels. If we break above 108, I'm looking left on the chart. There's a high there at 109.40. There's a high here at 110. So possible breakout coming on Aussie New Zealand. It's a little late in the season. Usually we start to see March and April moves on the Aussie New Zealand. It's a little bit quiet, but there's still enough time. It's still May. There's still trending season, stuff like that. We could have some type of drift that takes us into the summer months as well. All right, but I'll watch the Kiwi this week with a rate decision. Forex Factory calendar-wise for this week and currencies. We have big holiday for today. I'm not even sure what's going on in Europe. Whit Monday. Is that for all of Europe? Whit Monday. So that's for Eurozone, Switzerland. Okay. Monetary policy hearings for the Bank of Canada or Bank of England this week. We have IFO business climate. RBNZ is on Tuesday evening, 10 and 11 p.m. There's a rate decision expected to keep the cash rate the same at 0.25. Press conference at 11 p.m. Is it dovish? Is it hawkish? Is it neutral? We'll find out on Tuesday night to Wednesdays. It's Wednesday's trading day. Oil inventories on Wednesday as well. And Thursday, we have GDP numbers for the dollar, quarterly GDP numbers. We also have unemployment claims, which continue to be, something we have to keep an eye out for. I've said this for the last couple of weeks. If the U.S. continues to extend unemployment benefits, and right now they're extended till September, we're going to see sustained unemployment claims. People are not going to go back to work if they're getting paid more to stay at home. That's just smart, right? I mean, I'm not saying it's not lazy, but hey, if you're making an extra $600 a paycheck by staying at home, probably an easier decision to stay at home. And if that's going on until September, we're going to see that, we're still 8 or 9 million jobs away from full recovery from COVID from last year. People that want to work, just last week, I talked about this on my YouTube channel. There are a lot of private sector companies that are increasing their hourly rates, increasing their salaries, increasing their paths to growing it and getting people back to work. And right now, it's still not enough to entice workers back to the workforce. Part of that, again, if they're making more money by staying at home and staying unemployed, we're going to still see these numbers high. If this number stays high, the Fed's going to stay dovish. Granted, inflation can run hot. The Fed's going to have to acknowledge it at some point. But like I said, maybe it's kicking the can down the road. Maybe it's not until it absolutely has to be, a reality. Maybe September, maybe October, maybe 2022. I don't know. If I had a crystal ball, I'd share it with all of you, but I don't. So I'm just doing my part to do analysis and take good trades, just like anybody else. Okay. Any questions for me? I know we've gone a solid 30 minutes. We covered a lot. We covered stocks. We covered some cryptos. We covered some currency pairs. You know, I know that I'll see everybody this week in Equities on Demand. I'll see you all in the Flex Room. Looking forward to having another good week. We do have some news to watch, but let's just keep our head on a swivel, stay flexible. I think this is a good time to be directionally neutral, you know, mainly in stocks. That Tyson and I are doing that for Equities on Demand strategies. We do have a really good win streak running. So right now, just to take a look at a couple of trades here, I'll show you our spreadsheet we use in class. Our Master Blaster strategy. Right now we have 1, 2, 3, 4, 5, 6, 7 wins out of 8 trades. We're sitting up about 50% on our positions in just our one, again, that we call it the Master Blaster, but this is our directionally neutral strategy. And we also have some plays this week. We have our bull put spreads I talked about. We have our bear call spreads. So all good. So whether the market goes up or down or stay sideways, we're going to find a way to generate some profits this week in stocks and options. Currency-wise, it's going to be an interesting week. Let's see if the Kiwi is a bit of a storyline that we can trade and exploit. Let's see if it gives us something like pockets to trade, or maybe it starts to break out here towards the end of the month. This is the last full trading week of May. We don't officially close the month this Friday, but we trade until Monday the 31st. So next week, Monday, that'll wrap up May, and then officially it's summer trading. We usually start to see slower levels, highs and lows of foreign. We're looking for some range trading to, you know, commence the next 3-4 months. So keep an eye out, but we'll talk about this all this week in the Flex Room. If you have any questions, let me know. Otherwise, I'll let you all go. Thanks for being with me today. If you could do us one favor here at Market Traders Institute, if you watch these Ask an Analyst sessions, all of you out there know the routine. If you would kindly smash that thumbs up button for us, that helps. Again, this is free education, talking about all things stocks, Forex, cryptos, answering questions. We want this video to be out there and be seen. You know, obviously, I've been doing a lot of these by myself. You know, Tyson, Gary, Tad, the team are very busy at these times teaching live classes. But I hope the information is useful. I hope the information is worthwhile, and I appreciate everyone attending. But to get this video to be shared by others, you can take this link, you can share our channel, subscribe to the channel, and send that elsewhere. Also, if you're watching this video, just hitting that like button for us helps a ton. That way, when you search stocks or trading Forex or trading cryptocurrencies, our video here can pop up and be, you know, in the search. Because I think we're given as much good information with a lot of specifics, more so than what we see elsewhere with you know, supposed self-proclaimed gurus out there. So we appreciate all the likes, and the thumbs up helps. Okay, any questions for me? Let's see here. Yep, Denise, you're very welcome. Daniel says, will the UFO information the government's releasing affect the markets? I don't know, man. I mean, I suppose if it affects the markets in the same way that like tin foil hats and conspiracy theory does, which it certainly can, but I don't know. You know, I don't know. In fact, that's right now, that's like not even on my radar for something I'm gonna, you know, there's enough stuff that I'm watching and keeping tabs on. You know, I don't necessarily see UFOs affecting the market unless it's like, I guess we're going to go to war with aliens. If we go to war with aliens, then sure, it'll affect the markets. But if it's just, you know, all of this COVID stuff that was this awesome misdirection, and then they just go ahead and plug in like, oh, by the way, UFOs are real. Oh, by the way, this and this and this. It's like, oh, okay, thanks for sneaking that in there when no one's looking, right? On stocks, Abraham says, took profit on CREX earlier at 1.80, which opened a bit of a gap, went to 212. Had a small position, penny stock. Okay. That's good. I'll take a look at that one. CREX. All right, that's pretty cheap for sure. So good profit though. That's a 42-cent move on $1.80 is a great move. Congrats on that. That's a good trade. All right, traders. I'll see y'all this week in the trading room. Flex trading room for tomorrow. Equities on demand every day this week, and let's make it another great week. Okay. Take care. Talk to you soon. Thanks for being with us. Bye bye. X. All right, that's pretty cheap for sure.